Several capital markets globally currently pose gloomy postures to investors. The Nigerian market, one of such that was struck by the financial debacle of year 2008, belongs to this category. In view of restoring confidence to these markets, Business Hallmark, in collaboration with the Nigerian Stock Exchange not long ago, organized a public policy forum to evaluate ways of achieving investors' return to the market.
Undoubtedly, a forum like this involves the exercise of huge intellectual horsepower to stimulate enlightened minds that prefer solutions to human problems of diverse nature in a society that is grappling with what Bishop Hassan Kuka recently referred to as a moral deregulation.
Proffering facts for the restoration of confidence, chairman of the forum, the Bauchi State Governor, Issa Yuguda, stressed on the need for capital and the means of achieving same.
Nigeria is a highly endowed country, both in mineral, liquid minerals, and also, of course, agriculture. So we have a lot of potentials. We are a blessed country, very high rainfalls, rivers crisscrossing the country. We have a coastline of over 800 kilometers and a very large population of over 168 million as being quoted now. So you can see that the market is there, the resources is there, the food is there, and then what we need is the capital. And how do we get the capital? It is through this vehicle that we can only get this capital to move in and make sure that we turn around these raw materials into semi-finished and finished products so that we can create jobs and create wealth for our people. It is very, very important for us to think, to look outside for capital. If you add up the industry savings, because you talk about savings being the source of long-term investments, we can't use short-term funds to invest on long-term projects. You will sadly have a mismatch and you are in trouble. So savings apparently have always been told, saying, the surest source of stable funds that you can lend long-term. And we don't have this in Nigeria. If you look at, you take the industry balance sheet and add up all the savings in the banks, I think you might be a little bit discouraged. Because what you might come up with is something that might not be able to finance dual carriage road from Ibadan or from Lagos to Kano.
Presenting his roadmap to recovery, the Director General of the Nigerian Stock Exchange, Oscar Onyema, guaranteed the delivery of market segmentation, securities lending, and the introduction of the exchange-traded funds in his short-term plans.
So we've come up with things that are within our control and things that are outside of our control. Within our control, we believe that by the end of this year, we'll deliver on market segmentation. Actually, we launched that on November 1st. We believe that we'll deliver on market making, securities lending, short selling, the introduction of the very first exchange-traded fund in Nigeria, a revised listings requirement to make us more flexible, company share buyback to allow companies that want to optimize their market, their capital structure to do that, introduce a new website that will drive transparency of what we're doing, and hold one investor clinic. Market segmentation. What we did was to look at the way our industry classification exists currently, and we noticed that it doesn't really reflect the Nigerian economy or conform to global standards. So we decided to address that situation. As at the 1st of November, we consolidated 33 industry classes into 12 industry segments that are reflective of the Nigerian economy and are conform to global industry classification standards such as NIAC and SIC and GIGS. We think this classification will make it easier for foreign portfolio managers to access our markets because they'll be looking at industry classifications that they're familiar with. An exchange-traded fund is a fund that tracks an index or a basket of assets, underlying assets, that allows that you can trade like a stock, that you can trade like equity. But what it does is it gives you instant diversification. The very first one we're introducing is a gold ETF. So it allows you to have exposure to gold without leaving the capital markets. This ETF you're going to be hearing a lot about. It's currently being offered in South Africa and Botswana. It has about $2 billion in assets under management. And we believe that given the successes it has had in Africa, that Nigeria, as a giant of Africa, will do better.
Some discussants and attendees who added voice to the forum critiqued the presented blueprints for confidence restoration in the market.
Free education in state and the federal government. And that education must be funded by productive activity. So you see the connection between the stock market and employment and all the things that will make life better for us.
And one of the fundamental challenges we've had is, and which is what your team is not doing, is that we tend to talk about I'm planning this, I'm thinking of this. So it's about I'm thinking, I'm planning. And that increases or dissipates people's desire. What you laid out for me is very clear. I wish I could see it, but I'll be more interested in going to 1 or 2 points here. You see, the issues outside your control are actually the key challenges of the market. Government intervention, tax breaks on transaction fees, content resolution, broker access to funding. They have this new market. And there are 1 or 2 things you may like to add here that they may not entirely be outside of your control. They may be outside your control based on the structure which you're working with currently, but they are not outside your control. Because if we don't address these issues, everything will be more like a five-ring. Significantly, you have done one thing, which is to acknowledge that we're coming from a trust deficit position. You have gone ahead to take actions that affect the fundamentals of market. You have increased the level of self-regulation within your own institution. You have kept your communication with the market very clear and straightforward. But then you must also recognize one thing, that you will not get the telecoms industry to come into a market just because we wish for it to happen. We know it is good, but it won't happen. What we need, therefore, to do is to tell a certain group of people who I would consider to be the only set of people holding this market down, and that is the legislator. We have the Capital Markets Committee. We have the Capital Markets Committee. We have a banking committee. We have people who are more interested in conducting groups and doing investigations. Whereas we forget the fundamental group why they are there. The fundamental reason why they are there is to pass legislation that allows us to actually create the nexus between the capital market and the economy.
We have the indices driving the economy. The oil, the telecoms, the upstream, petroleum, they are there for no matter what you do, if you do not have the government back you up, those companies will not come to the stock exchange. And if they don't come, you cannot get the expected goods.
While the gathering rounded off, the leadership of the exchange ended with a determination to fine-tune on suggestions and their plans for the Nigerian capital markets.
Thank you for the comments, the suggestions, and the ideas. We would certainly go back and continue to fine-tune and make sure that we deliver on the things that we said we're going to deliver.